We are covering these 8 top actively traded stocks that are bullish today. While watching price actions, let us inform you our review on NGD, New Gold Incorporated, a Canadian intermediate gold miner, just received a major boost in stock value today, up 4.32%, after Bank of America upgraded its rating from underperform to buy. The new price target of $3.90 is a 50% increase from its previous estimate, reflecting strong performance and growth potential across its assets, including the Rainy River Gold Mine in Ontario and the new Afton Copper Gold Mine in British Columbia. The upgrade comes on the back of impressive production growth, with the company hitting 298,303 ounces of gold and 54 million pounds of copper in 2024. Not only did they manage to keep their costs below initial expectations, but they also generated $85 million in free cash flow despite significant investments in mine development. Analysts have taken note of the operational improvements at both sites, especially the cost-cutting initiatives and the increased stake in the new Afton mine, which is expected to fuel future growth. Looking ahead, 2025 is expected to bring even more upside, with gold production projected to increase by 18% and costs per ounce set to drop significantly. Bank of America has also raised its earnings estimates for New Gold, with expectations for 2025 earnings per share to hit 33 cents, up from just 15 cents previously, and 2026 earnings forecasted to nearly double at 58 cents per share. With gold prices expected to rise over the next few years, this could be a solid time for investors to take a closer look at New Gold, especially with the positive growth trajectory they're on. Our review on VZ, Verizon Communications Inc, a telecom giant providing wireless, wireline, broadband, and streaming services, saw its stock rise by 1.77% today after confirming it's on track to meet its FY25 financial and operational goals. The company has its sights set on growing wireless service revenue, expanding adjusted EBITDA and generating strong free cash flow, with a focus on maintaining steady operational improvements. For 2025, Verizon expects wireless service revenue to grow by 2% to 2.8%, with adjusted EBITDA growth projected between 2% and 3.5%. While EPS growth is forecasted to be modest, ranging from 0% to 3%, the company is banking on its ability to drive operational efficiency to hit these targets. Verizon also expects cash flow from operations to range between $35 billion and $37 billion, while free cash flow is anticipated to fall between $17.5 billion and $18.5 billion. The focus on enhancing customer experience and innovation within its mobile and broadband platforms is central to Verizon's strategy, which aims to offer differentiated services and strengthen customer relationships. This aligns with their broader commitment to operational growth. With today's stock rise, investors appear optimistic that Verizon is set to meet its FY25 goals. Our review on CDE, Coeur Mining Incorporated, a diversified precious metals producer with a portfolio of gold and silver mines across North America, saw its stock rise by 3.26% today. The company is set to present at the Mining Forum Europe in Zurich, Switzerland, on April 1, 2025, where Thomas S. Whalen, Senior Vice President and Chief Financial Officer, will provide insights into Coeur's operations and future plans. With assets spanning across Mexico, Nevada, Alaska, and South Dakota, Coeur Mining continues to focus on maximizing production from its wholly owned operations, including the Las Chispas silver-gold mine, the Palmarejo gold-silver complex, and others. The company's growth strategy includes expanding its exploration projects, such as the Silvertip Polymetallic Critical Minerals Project in British Columbia. Investors are likely hoping the presentation will shed light on Coeur's future plans for expanding its footprint in the precious metal space and any updates on its operational performance. Our review on BABA, Alibaba Group Holding Ltd, the massive player in the tech space spanning sectors like cloud services, e-commerce, digital media, and more, is making some major waves with its latest AI advancements. The company has just launched its new AI model, Qwen 2.5 Omni 7B, which is a pretty big deal. This model is multimodal, meaning it can process text, images, audio, and video and generate real-time text and speech responses. What's exciting is that it's designed to be deployed on edge devices like smartphones and laptops, making it highly accessible. In fact, it's already helping visually impaired individuals navigate their environments with real-time audio descriptions. On top of that, Alibaba open-sourced the model on platforms like Hugging Face and GitHub, allowing developers to take advantage of its powerful capabilities. The timing of this launch couldn't be better. Alibaba is in the thick of an AI arms race, with their previous model, Qwen 2.5 VL, already surpassing major models in areas like video analysis and document parsing. The company is also betting big on AI's potential, committing $53 billion to AI and cloud computing infrastructure over the next 3 years. All of this is setting up Alibaba to ride the wave of China's growing AI boom. Investor sentiment around Alibaba has been strong, and it's easy to see why. Over the past year, the stock has surged a staggering 85%, reflecting growing confidence in the company's ability to capitalize on the AI market. Just recently, Mizuho Securities raised its price target for Alibaba stock from $140 to $170, with a strong buy rating, citing the company's clear strategy to scale AI models and integrate them into multiple sectors. The stock is up 2.56% today, adding to the growing optimism. As Alibaba continues to innovate with its AI technologies, particularly with its Qwen series, it looks like the company is well-positioned to continue driving growth across its cloud, e-commerce, and other platforms. Investors will be keeping a close eye on how this develops, with the company's AI ambitions likely to be a major driver of future success. Our review on IBRX. ImmunityBio Incorporated, a clinical-stage biotechnology company, is really making waves today. The company's focus is on developing therapies and vaccines that strengthen the body's immune system to combat cancers and infectious diseases. They're using some pretty advanced tech, like their antibody cytokine fusion proteins and cutting-edge vaccine platforms, to boost both the innate and adaptive immune systems. This helps target a range of diseases, from urologic cancers to serious infectious diseases. Today, ImmunityBio stock is up a remarkable 20.86%, which is drawing a lot of attention from investors. This spike could be due to a range of positive factors, possibly related to promising results from their clinical trials or general market enthusiasm around their breakthroughs. Their lead product, Anktiva, an IL-15 superagonist antibody cytokine fusion protein, is a potential game-changer in immunotherapy. It's designed to amplify immune responses, especially in fighting cancer, and investors are clearly optimistic about its future in the market. For biotech investors, ImmunityBio is definitely one to watch. With such innovative platforms and promising early-stage results, this surge in stock price could be just the beginning. The company's continued progress through clinical trials and its potential to disrupt treatments for cancer and infectious diseases make it an exciting play. The stock's jump today reflects growing confidence in the company's ability to turn its science into real-world solutions. If the momentum keeps up, ImmunityBio could be a major player in the biotech space moving forward. Our review on NBIS. Nebius Group N.V, a Netherlands-based infrastructure company focused on artificial intelligence, is facing a rough patch lately. This company has been building a portfolio of AI-related technology assets, providing services like cloud platforms for AI workloads and autonomous vehicle development. Their goal is to become a key player in the AI infrastructure space, but right now their stock is struggling. Over the past month, Nebius Group stock has dropped about 25%, significantly underperforming the broader market. The dip comes as investors are reacting to a series of setbacks, starting with their divestment from Yandex at a massive 50% discount. The company was attempting to distance itself from Russia, but that move led to the loss of several profitable business segments like search, e-commerce, and food delivery. Since then, Nebius has faced widening losses, including a $136.6 million loss for Q4 2024, up from $94.2 million in the previous quarter. To add to the challenges, Nebius is heavily reliant on the AI infrastructure market, which comes with long lead times for customer deals, complex contract negotiations, and potential customer churn. They're also dealing with risks tied to semiconductor supply chains and competition from much larger players like Amazon, Microsoft, and Alphabet, who already have established AI cloud platforms. On top of that, technical indicators for the stock are also pointing to a bearish trend, with the stock trading below its 50-day moving average. This suggests that more downside could be ahead in the short term. While Nebius' commitment to AI and cloud infrastructure is clear, the company's limited resources and ongoing financial struggles make its future uncertain for investors right now. Despite a slight uptick of 2.83% today, the outlook for Nebius remains pretty cautious. If you're holding the stock, it might be time to reassess your position, as the current risks and challenges could continue to weigh down performance. Our review on FSM. Fortuna Mining Corporation, a Canadian precious metals producer with mines across Latin America and West Africa, is staying busy with some important updates. The company operates mines in countries like Argentina, Mexico, Peru, and Burkina Faso, focusing on gold, silver, lead, and zinc production. It has been making strides to keep shareholders informed, recently filing its fiscal 2024 annual report with the SEC, which includes its financial statements and management's insights. This move is all about maintaining transparency and showing its commitment to regulatory compliance. But there's more going on than just paperwork. Fortuna is also taking the stage at Mining Forum Europe 2025 in Zurich, Switzerland, where CEO Jorge A. Ganoza will be presenting the company's operations and sustainability efforts. This event is crucial for enhancing its visibility in the market and boosting its relationship with stakeholders. As for stock performance, the company has been seeing a positive trend, up 2.3% today and up 2.88% recently. Investors are likely keeping an eye on these developments as Fortuna continues to focus on transparency and positioning itself in a competitive industry. For those watching the precious metals sector, this could be one to keep on the radar. Our review on GOLD. Barrick Gold Corporation, one of the world's leading gold and copper producers, has been riding high this year, and there's good reason for that. The company operates mines in key gold and copper regions like Canada, the United States, Tanzania, and the Dominican Republic, among others. As gold prices continue to climb, Barrick is benefiting significantly. So, why are gold prices surging? Analysts have been raising their price forecasts for gold, especially in light of ongoing economic and geopolitical uncertainty. According to Bank of America, gold could reach new highs, with predictions that it could soar to $3,350 an ounce by 2026. That's a huge jump from previous forecasts, and it's all driven by concerns over President Trump's trade policies, tariffs, and ongoing global tensions. For investors, this is great news for gold stocks like Barrick. The company's stock is already up 25% year-to-date, and with gold continuing to shine as a safe haven asset, Barrick's prospects look even better. Barrick's position as a major player in the gold and copper markets, paired with these rising gold prices, makes it one of the top stocks to watch in the precious metals space. However, there's always the risk that things could cool off. If geopolitical tensions ease or if trade policies change, the gold price might not keep its upward trajectory. But for now, the outlook remains positive, and Barrick is clearly benefiting from the gold boom. Please subscribe, give the video a like, and watch more from our playlist. Thanks.